Okay, Mark. So, the worst October in a long time. Midterm elections, emotions are heated. I'm hearing pretty large turnout. First of all, does the midterms and their outcome figure into your analysis since you're really a technician anyway?
Yeah, no, I honestly don't give that a whole lot of weight. I mean, a lot of this recent volatility has been sort of something that I've been discussing, I guess, for the last couple of months, and that began back in the middle part of September. So,
Right.
a lot of the movement is, determined really by cycles and sentiment and seasonality. It should have really little to nothing to do with macro events, earnings, or presidential elections or midterm elections. Like we're seeing. So
then I assume you carry positions into like a major news event, like a midterm or central bank decisions, NFP, etc.
Yeah, I mean it's to each their own in terms of risk tolerance and what they wish to do. But yeah, I turned bullish last week. I saw the price action with regards to equities as being somewhat constructive and got down to levels that I thought were important. And we've seen some recent improvement in structure and breadth and momentum. And this picture of the S&P futures sort of shows you, getting back above really key near-term trendline resistance, along with getting back above former lows, which I view as still quite positive. So, people are obviously very concerned, I think, with a lot of good reasons for the extent of the recent drawdown and how that's affected a lot of the technical patterns on an intermediate term basis and monthly. But near term, I still see there being a good chance that we can push higher. This week
failing rally. New highs are failing rally. Which way do you lean?
I've been discussing this with a few people. I'm not certain that we're out of the woods completely and that it's up and away. I think that we're going to see some backing and filling, and that could occur either this week or next week. I think the extent of the sell-off likely will be done by mid-month in equities, and I think we'll probably turn higher for a period of potentially 5 or 6 months. And I don't know that. Indices, likely can make a move back to new highs. I'm not certain that the average stock will. I see there as being a lot of damage having been done to broader momentum. And so, for me, that is important when you look at things like, the S&P on a weekly basis or monthly basis, and you see, the negative divergences that have been intact for some time. And
right.
Those are a little bit of a concern when you look at weekly charts and you see really the extent of what has happened just since the drawdown, where we really got to the most overbought status that we've been in years back in January, and then even on the rally back to new high territory, momentum really got nowhere near that. And so for me,
great point.
That's certainly a warning sign and something that we saw back in 2000 and also in 2007. So, when I look at the longer term picture, it is a concern to see that momentum is starting to fail to keep up with price. And for me, that's that is a sign that equities likely are going to start to begin a peaking out process. And I'm not certain that, we're there and we go straight down this year. We could potentially have another month or two of rockiness before a rally into next year, but I still see this as being.
So we're late cycle. We're late cycle.
Oh, very much. I think that's right. I think either it begins next year or it begins in 2020, and likely lasts for 2 to 3 years, and potentially to 2022. I think so.
Okay.
I'm not all that optimistic over the next, between now and the early 2020s, but I think that in the next 6 to 8 months, if you're, if you can track strength, that you can still make money in this market. There's certainly plenty of stocks that look attractive to me, but I do have some worry. I just worry that, everybody is sort of saying, well, the economy is slowing and we're on top of it and it's time for everything to turn down. And I think it's a little premature. We're coming upon one of the better stretches of seasonality that we typically see in all midterm election years. There's
So maybe
really
the
never
big
been.
question, the big question is not whether or not which way the market goes, but being in the right sectors to participate in an advance. And is it possible in your work that, the FANGs are done and that leadership is going to have to come from other sectors to lead it? Maybe it's going to be possibly even commodity related stocks could come
Well,
back.
I think that probably eventually will prove right. I mean, some of that has to do with the U.S. dollar and whether that's turning down. We can talk about that in a little bit. I think that, FANG certainly has shown some evidence of peaking out when you just look at baskets of, the FANG stocks based on the New York FANG index, which has about 10 stocks, and there is Tesla that's included in that. I typically tend to look at things like the equal weighted technology index, SPX, EWIT, and Bloomberg, and so that's something that strips out a lot of the large cap tech stocks. And for me, you did see some evidence of that having peaked out just in in the middle part of this summer. We saw tech start to weaken. So this is a ratio chart of tech on an equal weighted basis versus the S&P. You can see that this 2-year trend line was in fact broken. We fell, and now we're rebounding back. So it's going to face some really key challenges, I think, in the weeks to come, and whether we can simply snap back or whether there's more to come. And for now, I'm not certain personally that this growth trade is completely run its course. I mean, I look at things like growth versus value, and we did see some near-term signs of that being a bit shaky of late. But I look at just ratios of the S&P ETFs, the growth versus value. For me, this is still intact. This isn't really a top, but we've certainly seen some choppiness since the summer. So I like healthcare. I like discretionary industrials. I think the recent movement in financials and industrials, for those that just track some of these indices, has been very constructive, what we saw last week. And it's important for people to pay attention to really what's happening, because we saw, pretty big breakdowns across the board, and then that was immediately recouped. And if anything, you look to have made 5-wave declines in many of these ETFs, and now we've snapped back and recaptured the area of the loss. And so the breadth last week was a lot stronger on the upside than what we saw from, the 11th or the 17th
what are we looking at here? Are these the banks? The XLF? So
this is just the XLF. This is the broader, and of course that's weighted heavily towards the the Berkshire and the Wells Fargo. But it is important to see when breakdowns fail, and I think you did see that in a couple different ETFs last week, whether it be XLF or XLI. So I turned pretty much negative back in the middle part of August, and I was, a few weeks early with regards to catching the peak of the market, but breadth did turn down, really the final day of August with regards to advanced decline, turned lower throughout September. Markets obviously peaked on the 20th, right near the equinox, and then again on the 3rd of October. So it was, an interesting time when nothing was working. And so people sort of scratched their heads that, why did the market sell off in October? And for me, it made perfect sense. The market was finally paying attention to what breadth and momentum had been suggesting for
months,
some time. If anything, for me, September was a much stranger month because tech wasn't working and the market was going up, but yet fewer and fewer stocks were participating.
Yeah, that was a pretty good market tell. So how's the dollar play into all of this?
Well, I think the dollar is going to peak out by year end. I still feel that the dollar has some upside when you look at things like the Bloomberg Dollar Index, which has a far lesser component against the euro than when looking at the Dixie. And so, when I look at daily and weekly charts of the dollar, I'm still constructive near term. I think that, the movement today in particular looks to have reversed, and we very well could start to turn up a little bit more. And, I look at this as being a pretty clean breakout of the consolidation that really has been intact over the last few months and really since the middle part of 2017. So when you look on a weekly basis and really see how, some of the DeMark signals that I use line up with that, you see that, It's still a little bit early to call for a peak in the dollar, even though sentiment has gotten very, enthusiastic, I think, to say the least. So, I'm sort of a near-term dollar bull for the next 3 to 5 weeks, and I think I would turn a little bit more negative, at least from a counter trend perspective, on really any further rally into mid to late November, or if you see obviously weakness, and you look at euro to dollar and pound to dollar. I mean, I think most of these are still showing evidence of.
I'd like to see your look in euro, if you don't mind, and
yeah,
and if we're talking, why is it that you have this time period marked as a potential turning point in the dollar? November, December.
Well, I only look related? It is, and I just look at historical cycles of you have seen quite a few turns in the dollar, I think, in the month of November, December in the past, and we saw the dollar peak out in late December of 2016, and
right.
I see it being really a cycle that began in 2016 and should be trending lower into the early 2020s. So I'm really looking at selling into strength in the U.S. dollar over the next month. But I don't view this chart just yet as being all that bullish with regards to the euro. So I'm still thinking that we probably pull back to potentially 111 and a quarter, 111.50 or so over the next 3 to 5 weeks. And for me, that would line up perfectly with the mark, and it would catch a lot of people off guard, I think, that would be forced to cover, to feel that they were wrong and betting, on the dollar against the euro, and that would really embolden them at really the wrong time when it's likely that we could probably hold.
You'd start hearing parity talk again, Mark.
Yeah, I think when that starts up again, then we would really be inclined to sort of fade that move and think that we reverse. So, okay. But right now, I mean, this move is intact, and the euro down and up on the dollar. And when you look at dollar yen, I think we're coming upon a pretty critical area there too, which we'll see how that plays out. But the charts have looked pretty constructive to me, there, and so. I look at this as being pretty, even from 2015, I think you have to view that, at least for now, as being, somewhat constructive in terms of how that looks. So I'm really, and you can look at it from a shorter time period, as most do, and say, I believe as Blake was saying, 112 is a key level. I would obviously use any move down under 111.38, which is a long way away. That would certainly be a stop for longs, but otherwise I think there's a good chance that this resolves higher in the near term and can try to push up, which for me would be pretty constructive in this chart going back since 2015 in this. So that's
okay. Interesting. Does that mean that there's a potential setup coming in precious metals towards the end of the year, and possibly even energy, with the dollar being a major factor in, even though gold, I want to ask you, what were your thoughts when the dollar was going up and gold continued to recover?
Yeah, and it's interesting. The last couple months have been pretty resilient for gold, even in the wake of dollar strength. And of course, those aren't really necessarily always that negatively correlated. I mean, some would argue that the yuan and others are. I look at when rates and the dollar typically go up. Typically, it's a very bad time for gold. Maybe you could argue that was just a different cycle that we're in, and part of that is risk off type, safe haven, trying to find. I think it's a little early right now for gold. I know that sentiment has gotten very negative, and pardon me, my computer's slow here. I don't know why it's not loading. So I'm still sort of a bear on gold based on even on this bounce, and I don't know, if we get up to 1270, I would be inclined to sort of fade that and think that you sort of pull back and you have a final hurrah to the downside and really wash people out before
1120-ish. Like that low in December.
Yeah, I would absolutely. If you were to get anywhere near back to early 2017 levels, I'm still, I like the longer term base at work. I just can't argue that right now. I find it tough to think that it's going to be off to the races with what's happening with yields and with the dollar. I think both of them are moving
Okay,
higher. And so
got it.
as equities start to resolve, then it's going to be tough for gold to really make that move just yet. But as the end of the year approaches, I think commodities can start to do better potentially, but much of that should depend on the dollar starting to turn down. For now, I think that's a little premature.
Okay, so then is it possible
Coach,
that,
Coach,
let me just ask one more,
if I,
Steve. I just want to ask him, do
it's
you think that,
related, it's just related to the dollar because, you were talking
oh,
about the
go
dollar
ahead.
for a long time. So I just wanted to ask Mark if he can clarify what kind of a top is he looking for in dollar? And I'm not talking about levels. I mean, are you actually looking for the dollar to top out and really wash out lower? Or are we talking about like, a pullback? That's what I wanted to know.
The nature of
Well,
a high, is it a high or
Yeah,
could it be the
exactly.
high?
yeah. I mean, a lot of that's just going to depend on the structure really starting to show more signs. It's been, pretty constructive of late. I mean, I was sort of negative back in the middle part of the year, thinking that potentially we would peak out as of June, July, and now that seems to have resolved back higher. So for now, I have to trust this until I see evidence. I have an awareness of the cycles and the fact that the dollar, I think, should be turning down in the next couple of years, but I'm unwilling to make an intermediate term call yet technically that, we're here. I think that if you were to get, the Dixie up near 98 or potentially up near 100 and you show a little more symmetry with this longer term pattern, that might bring out some, you look on a monthly basis and you can make a case for, 13s to materialize. That would take a move up to 102. I mean, that's a huge move, but you look at the broader, scheme of things, and the dollar's still been trending up for the last, arguably 8 years. It's been choppy over the last few,
Is it
but
because Larry Kudlow's in the White House as a advisor? King dollar, king dollar, king dollar.
Well, I think I'm very skeptical of the power of anybody to manipulate or influence the dollar. I mean, a lot of that's just short-term noise and algorithms, but the true cycles tend to, play out, and it has little to do with Kudlow or Trump or anybody in terms of what their thoughts. I mean, so, this is still a pretty good, go ahead.
Could it be yields? You're talking about perhaps the yields peak towards the end of the year with the dollar? Is that a possible
potentially
scenario?
I think that's right. I don't know that the bond market truly believes that the growth can continue if the Fed continues to hike. I think it has been a very constructive move, and right now you still want to bet on yields going higher. In my view,
4%?
I think that it's been a very no. I think probably 3.5. I don't.
Okay.
I don't make these longer term prognostications. I just for now I'm sort of bearish on treasuries. I do respect the longer term pattern.
Yeah.
I think that sentiment has been bearish and the bears have been rewarded, but I don't know that can continue indefinitely. So if stocks really start to turn down, you will see a flight to quality that you really haven't seen in the past. For now, I'm still pretty, bullish on rates. I think yields still move higher. I don't think you can make a whole lot with this, just yet as to thinking, yields have peaked out. So that could mean between now and next March, April that you see yields continue, or maybe that's a year-end thing where it happens in December. But I'll certainly be watching. For now, my trend over the next 3 to 5 weeks is still bearish treasuries, bullish dollar. I think yields move higher. I think the dollar moves a little higher into mid to late November, and then I think you probably turn in the dollar, and we'll turn back up in commodities, and we'll see.
You think a weak
equities
dollar will help equities?
Well, it'll help certain parts of equities, certainly. Like materials and industrials, I don't know,
Right.
potentially energy is a different animal there, but
Because
I don't.
They've been a lot of complaints during earnings season of a strong dollar hurting earnings on the currency translation. So would a weaker dollar help these transnationals do better? Nominally, anyway.
Well, certainly. I mean, you have to think that's correct, and it's not something that I put in my analysis. But I can't disagree with that. I think anything related to metals and mining and chemicals, most material stocks would likely start to bottom out and show much greater strength, which really has been sort of tough to come by of late. Most people are buying gold stocks, and it just hasn't been a great trade up until recently. I think you have seen at least a little bit of a bounce. But, the patterns on most of these things have been very difficult after the breakdown that we saw into September. Most people expected this would resolve higher, and it just has been, it's been tough to come by. So
and it's been underperforming the bullion, which isn't the greatest sign, is it? You really want to see the shares lead the bullion higher.
Yeah, potentially after the midterm election, that would cause the dollar to really begin the final, the final move higher in this cycle, and whether it stops in late November, late December, we'll cross that bridge when we come to it. But I think it's right to be long dollar here, at least over the next 3 to 5 weeks.
Any view on crude, Mark?
I had thought that we would probably stall out a little bit higher than we would and turn back up, and that simply has not materialized. So, that's interesting. I think, we are still in sort of a negative time seasonally for crude oil. I think, the time between February and May is a time to be bullish. Based on weekly charts, you could argue this area does have some importance based on just Ichimoku clouds, but we certainly have broken, the trend from last year technically. I would think that we're close to a decent counter trend rally. We're just getting to levels where you should start to snap back and at least try to push back to the high 60s. But we'll see how that really materializes. I think it's, for now it's been a tough trade, and with the sanctions, coming into full gear, we'll see if it's more of a sell the rally, sell the rumor and buy the news once it happens. I think crude certainly has a pretty decent floor technically, between 62 and 63. DeMark wise, it's going to take another 3 to 5 days. So I think you're getting close to a near-term low. I think it's probably still a little early, and I think once we see more evidence of some exhaustion and or some evidence of price starting to lift, you just don't see that right now. So near term, it's still right to be a bear, and it's just tough to fight trends. You could bounce a little bit, but you're not quite there, in my opinion.
Okay, well, Mark, you have a lot of fans here at ForexAnalytix, including our CEO Blake. And for people that you can't find you on CNBC when you make your appearances, I know your Twitter handle's at Mark Newton CMT, but perhaps you could show your website and give the address for people to get in touch.
Yeah, that'd be great. I'm happy to do that. So let's.
How's it feel to have a lot of fans that are professional, not just
Wonderful. Yeah. Look, I appreciate the support of everybody. It's been an interesting market, and it's gotten a little more. It's gotten a lot more fun for many of us, just based on the volatility or so. So this is my website. It's newtonadvisor.com. I've been providing technical analysis to institutions over the last couple of years since I started this up in 2016. So I do have a free trial. As you notice, this box will come open if any have an interest in seeing what I write on a daily basis. I put out 2 notes a day. I put out a weekly note, and I usually try to do some intraday type things as well. I do have a blog that I try to keep updated, and as you note, I do have a public Twitter handle at Mark Newton CMT. I also have a private one at Newton Advisors that is for clients only, where I cover some of what I feel are the best risk reward trades out there. And I've recently partnered up with StockTwits as well. So I have 2 different rooms that I'm offering there for a very cheap price. $25 a month will get you a lot of my my best risk reward stock ideas, and then I offer my daily and weekly notes on there as well in a different room. So I'll be on CNBC this Wednesday at 2:25 tentatively, so hopefully that will go through as planned. But I'd invite Those who want information to look at my website or email me at info@newtonadvisor.com. Happy to discuss whatever it is that you're looking at where I can be of help.
Well, much prosperity, health, and joy for you and your family during this upcoming holiday season, Mark.
Thanks, Dale. Likewise, the same to you and same to everybody out there listening.
Thank you, my trading warrior brother, Mark Newton. Another great review of the board. Thanks for helping us crystallize the jigsaw puzzle today, buddy.
Have a great day. Take care. Have a wonderful and profitable week for you and for everybody.
Thank you very much.
Happy holidays.
Happy holidays, Mark Newton. That's a wrap for us, guys. Good hunting the rest of the day. Tread lightly till the dust settles. That's my opinion. And remember, don't just count your pips, count your blessings. Thanks again, Mark Newton. And we'll see everyone for Midterm Tuesday and also for Turnaround Tuesday. See you tomorrow, guys. Adios. Thanks again, Mark. You're very welcome.